Something extraordinary is unfolding in the global tech world, and it's turning decades of dominance upside down. Out of Beijing came a decision that sent shockwaves through Silicon Valley. China has officially banned all foreign-made processors from government systems. Overnight, giants like Intel and AMD found themselves completely shut out of one of their biggest markets. But the real story isn't just about a ban. It's about how China reached this point. Only a few years ago, the idea of China building chips that could rival the West was laughed off as wishful thinking. Experts said it would take decades, but in less than 5 years that prediction has been shattered. Against every expectation, China's homegrown chip industry has gone from imitation to innovation, and now it's threatening the very foundation of America's technological power. For Intel, the blow is devastating. Nearly 30% of its revenue once came from China. Much of it from stable, long-term government contracts. Those billions are gone in an instant. According to semiconductor analyst Dr. Marcus Zhang, this isn't a normal market shift. It's a complete rewriting of the global tech order. So how did China pull this off so fast? Ironically, it was Western sanctions that lit the fire. When access to ASML's cutting-edge chip-making tools was cut off, Chinese engineers didn't stop. They innovated. Companies like SMIC used older machines in new ways, achieving near 7-nanometer performance through clever engineering. Every time we were blocked, says former state tech advisor Dr. Li Wei, we learned to build what we couldn't buy. Behind this quiet revolution lies a nationwide blueprint, the Xinchuang Program, a plan requiring every major government and corporate system in China to move to domestic hardware and software by 2027. Step by step, ministries, telecom firms, and banks began replacing Intel and AMD systems with Chinese processors, designed by Huawei, Luxin, and Fidium. The results are staggering. Chinese universities now produce more semiconductor engineers each year than all U.S. institutions combined. Massive state-funded research hubs are testing new materials and architectures, while Huawei has transformed from a phone maker into a global chip design leader. What once seemed like catch-up has turned into a race for dominance. Wall Street is watching in disbelief. Intel's market value has slipped as investors realize that losing China doesn't just mean lost sales. It means losing the cash flow needed to fund future innovation. And this isn't only Intel's problem. Across the entire tech landscape, the world is dividing into two digital spheres. One built on Western tech like Intel, AMD, and NVIDIA, and another built on Chinese platforms powered by Huawei and SMIC. China isn't just swapping out components, it's building a parallel digital civilization. Systems like HarmonyOS, Kylin OS, and Kunpeng processors form a complete ecosystem that can function entirely without American software or hardware. Chinese government offices have already migrated, running mission-critical operations with homegrown tools. We're not just self-reliant, a senior official declared. We're redefining what digital independence means. The rest of the world is taking notice. Developing nations across Asia, Africa, and the Middle East are turning their attention eastward. When Huawei and SMIC offer high-performance chips at lower prices with flexible financing, the choice is simple. It's about practicality, not politics. In Southeast Asia, longtime Intel partners are quietly shifting their loyalties, anticipating the next big technological wave. Washington, meanwhile, is on edge. Intelligence agencies are calling this a critical turning point in the US-China tech rivalry. Micron's withdrawal from China's memory market was only the beginning. Beijing then tightened its grip on rare earth materials, the essential elements for smartphones, EVs, and wind turbines, over which China controls nearly 85% of global refining capacity. Supply chain analyst Maria Rodriguez summed it up. You can't build the future when someone else controls the materials. But China's strategy goes beyond raw resources. It's about total ecosystem control. Huawei's Ascend AI chips are now powering smart cities and defense systems across the nation, rivaling NVIDIA's best. When Dutch regulators seized the Chinese-owned chipmaker Nexperia citing security concerns, Beijing immediately struck back with its own export bans. The message was unmistakable. The age of unchallenged Western tech dominance is over. While the West debates, China builds. In 2023 alone, over 3,000 semiconductor-related startups registered in Shenzhen. Not just manufacturers, but software firms, equipment makers, and testing labs. An entire industrial ecosystem has taken shape almost overnight. For Western tech giants, this creates a dangerous spiral. Losing China means losing revenue, which means less investment in research, which in turn means falling further behind. And then came Huawei's next shock. In November 2024, the company unveiled something that left Silicon Valley stunned. A smartphone that could send messages directly to satellites. No antenna, no special gear. The Mate 70 wasn't just another device. It was a technological earthquake. Imagine standing in the middle of the Alaskan wilderness or a disaster zone with no cell towers in sight, yet still being able to message anyone, anywhere on Earth. While American firms were busy arguing over 5G coverage, China had quietly launched 15 low-orbit satellites, built a 3,000-kilometer ground network, and packed all that connectivity into a regular-sized phone. Huawei's engineers designed a breakthrough amplifier chip strong enough to reach satellites moving 27,000 kilometers per hour, with less than a 1-second delay. And when Google cut off Android support, Huawei simply built its own platform, HarmonyOS Next, now running thousands of apps. This innovation didn't just connect people. It rewrote the rules of communication. In regions where telecom infrastructure barely exists, a single device now offers full global coverage. During floods in Southeast Asia and earthquakes in Xinchuang, rescuers coordinated through Huawei phones long after traditional networks had failed. In Kenya, entire communities leapfrogged decades of telecom development overnight. The U.S. response has been anxious and divided. The Pentagon labeled Huawei's satellite system a potential national security threat, while Apple and Google scrambled to develop their own satellite communication features. But Huawei's system operates on its own terms, linked to China's Beidou navigation satellites instead of GPS, and secured with end-to-end encryption nearly impossible to intercept. What's unfolding is bigger than a trade war. The unified digital world that once connected everyone under the same technology is splitting apart. Two systems, two standards, two visions of the future. One Western, one Chinese. And this time, China isn't following anyone's lead. It's building a new digital world, and the rest of the planet is deciding which side of it to live on. In recent years, a quiet revolution has been unfolding, one that's taking shape far beyond the reach of Western control. A self-contained communication network has emerged, operating on its own orbit, powered by technology that doesn't depend on American satellites or European infrastructure. Its influence is spreading fast. Cargo ships crossing the Pacific now maintain live video links with families back home. Arctic researchers, once cut off for months, stay online without interruption. Huawei is even field testing devices, tablets, laptops, and vehicles that can stay connected anywhere on Earth without a single Western relay. But the greatest transformation is happening where connectivity was once a luxury. Across Africa, nations are lining up to adopt this system after Kenya's successful rollout. Nigeria alone faces the challenge of installing more than 100,000 cell towers, a project worth billions that remains out of reach. Huawei's satellite solution offers them a shortcut: universal internet access at a fraction of the traditional cost. Compared to Western carriers spending over $100 billion on 5G upgrades, China's entire satellite network cost less than 1/10 of that. The numbers speak for themselves. Despite years of sanctions, Huawei hasn't slowed, it's evolved. Its HarmonyOS ecosystem now hosts tens of thousands of apps, all powered by domestically designed chips born from necessity after the US banned exports. What began as punishment has become a spark for innovation, and this technological rise is now shaping diplomacy itself. When a group of African telecom ministers visited Beijing in late 2024, their discussions went far beyond mobile networks. They were laying the foundation for a new era of digital alliances, one that operates outside Western dominance. By early 2025, Huawei's satellite system was put to the test under extreme conditions. Journalists sent high-resolution images from deep in the Gobi Desert, while rescue teams in Sichuan coordinated relief efforts after an earthquake destroyed ground networks. Each success proved China's communications technology wasn't just working. It was redefining the global balance. Then came a decision that shook the entire tech world. Beijing ordered every Chinese company to stop buying US-made semiconductors, an abrupt move that cut off American chipmakers from their biggest customer overnight. Nvidia, AMD, and Qualcomm lost billions in expected sales within days. The Trump administration believed it had found a clever compromise by allowing limited chip exports to China, taxed at 15% per sale. Instead, Beijing simply refused. Rather than accept dependence, China walked away entirely. That single act exposed a fundamental miscalculation in Washington. For decades, U.S. policy tried to keep China behind in chip technology through sanctions and export bans. But those same barriers forced Beijing to invest heavily in its own capabilities. Massive research hubs appeared across the country. Universities expanded their semiconductor programs, and the results came faster than anyone predicted. What experts thought would take 10 years happened in half that time. Companies like SMIC now produce 7-nanometer processors, while AI firms such as DeepSeek are competing directly with Western counterparts, using only Chinese-built chips. The consequences for America's tech industry are profound. Treasury officials privately admit that losing Chinese buyers threatens not just profits but the research funding that fuels innovation itself. Semiconductors are the foundation of modern technology, from smartphones to AI to military systems. And losing that market means losing momentum. The balance of power is shifting and fast, but the story doesn't end with chips. In early 2025, China made another calculated move. quietly offloading $53 billion in U.S. Treasury bonds in the largest sell-off ever recorded. Global markets barely reacted, but the message was unmistakable. The world's second-largest economy is reducing its reliance on the dollar and rewriting the rules of international finance. The U.S. dollar, once untouchable, is now facing its weakest performance in decades. Investors are pulling money out of American markets at record speed, and China's central bank is converting those dollars into gold, over 2,200 tons and rising. Meanwhile, the BRICS alliance, once just 5 nations, has expanded into a global force representing half the world's population and nearly 40% of global GDP. Countries like Indonesia, Vietnam, and Egypt are conducting trade outside the dollar system entirely. Former President Trump's threats of new tariffs did little to change their course. India brushed them aside. China ignored them completely. The world kept moving forward, just not under American rules anymore. Across communications, semiconductors, and global finance, the pattern is clear. What began as an attempt to contain China has instead ignited a worldwide realignment. A new technological and economic order is forming, one that's no longer built around Washington, but around the rising power of Beijing.